Okay, everybody. So like an erupting volcano, similar to the one El Salvador is now using to supposedly mine Bitcoin, Bitcoin as well as other major cryptocurrencies, they erupted this morning. That started at about 3 a.m. It's October 1st and prices shot up quite a bit. And so let's take a look at that and see what that means in the near future. Alright, so before we head to the charts, just a quick look at news on Google, just typing in Bitcoin. I don't really see much news, about price spikes. There's a little bit, of stuff showing bullish interest, but most of the news is El Salvador, and that's actually blamed in a few articles for the spike on Bitcoin. And then there was one mention about price growing. Oh, yeah, right here on Bloomberg, but not a whole lot of stuff in the news. But let's take a look at the charts. Let me just go straight to Bitcoin to start there, and let's go to like a 2 hour. Okay, so as we could see, this move right here from about, like I said, so right about 2 on this candle is showing me like 2 a.m. candle, but let's just go from here. Let's go from the base of the breakout candle to the high so far of the day. So Bitcoin shot up 10%, this morning. So everybody woke up to this nice breakout, and it's just kind of been sitting right here in this zone all day. Now, 10% may not seem like a whole lot, but this is very, very interesting considering where the price is right now and what this candle means going forward. So if we zoom out, you go to the 4 hour chart. I won't keep you long, but just to do a quick backtrack, you'll notice that I have this 1, 2, 3, 4, 5 wave pattern marked out, but just to go back to the beginning really, really quick, I'm going to go fast with this. We started out looking at our Elliott wave, right down here. Sorry, need a bit more room. Okay, so looking at our Elliott wave right down here, starting at the base, watching this channel. So here we got our Elliott wave, wave 1, correction, wave 2, wave 3, correction, wave 4, and wave 5 right there. So that was our initial, what we've always been looking at, boxing in this red channel on Bitcoin, nice clean flow up. And yes, I did get confused in this area. It can happen. I kind of prematurely thought that this was the pullback or a lack of a pullback or the lack of a wave 5. There was just a lot of confusion for me when this was going on, and really what it was just a weird consolidation of a wave A and then a bull trap wave B right there. But what I'm going to do right now is I'm going to overlay our ABC correction. So from the top of wave 5, price falls down. That makes up our wave A. Whether you want to put the base of that wave here or here, I guess it probably should be here. And then this would be the top of wave B. That was the bull trap. And then this long extension would be wave C, wherever that goes, but this entire extension would be wave C. So that's your A, your B, and then the C runs all the way down. Now, in the wave C, you're going to have 5 waves, okay? And so that's what these initial waves here that I had up. So we had our 5 waves up on the impulse. we have our overall ABC correction, but within the C wave, we have our 5 waves down. So 3 waves for the A, but the patterns, there's like 22 different correction patterns. So sometimes it's not a 3 wave A wave. It could be a 5 wave A wave, which this kind of would have been. If you look really closely, there's the 1, 2, 3, 4, 5, and then 3 wave B, 1, 2, 3, and then the big C wave correction. So a lot going on, but overall it's important to have the basics because it's always a guide. It's not black and white, it's not absolute. All these principles, all these series are guides that we use to help us to predict or figure out what's going on. So long story short, I'm going to clean up the chart a bit, just move these back out of the way so we could focus on the C wave correction. So we had our first wave down. This was the big crash. Boom, wave 1, wave 2, wave 3, and then wave 4 could have been like right here. No, that was our wave 4. And as you could see, I actually had the wave 5 extension pulled all the way down here, not meaning that it had to go that far, but just a potential, because in this wave 1 with wave 2 correction, based on Fibonacci, it is likely that you can get a pullback all the way down to the 786, which I have highlighted in red right there. And then you can also see I have the golden zone, the 50 to the 618 percentile boxed up with this yellow box. And as you can see, price sat right on top of it. And not ironically, because these things all work together, that sits right by this strong support and resistance level that I have highlighted right here. And so as you can see, price has just been sitting on that level for the past few weeks. And the question has been, will it bounce from this level, or will it break down and go a bit further, whether to the 618 or even the 786 level? But looking at the trend line, this upper resistance trend line, it broke that trend line with this 10% push to the upside. So it did that. It peaked through this level of support and resistance zone that I have highlighted with this smaller blue rectangle, and it also broke back into this consolidation zone where we saw price sit for quite a while up here before we got the false breakout and then the flush down to these lower levels. So these two support and resistance lines that I have highlighted in red, price is now broken into that zone and sitting around this strong support and resistance level where we could see a reversal to the downside. So it is not absolute as yet that the C wave correction is over. At least not in my mind, it's not an absolute guarantee, but I definitely do think that this has a high potential of the start of our wave 3 push to the upside. And what I would be looking to see coming up, not only as an entry but also as confirmation, is for price to possibly make a correction back down to this level that it broke out from. Notice this trend line right here at this 43.7 price, and then bounce, start pushing to the upside. So that's kind of what I would like to see, not only to get a good entry, so I would like it, of course, but it would be it would be expected, I think, but as is common with cryptos, very volatile, very aggressive price, we could just see this shoot up all the way to this level and beyond, or could go really parabolic, or it could spike up there and then, maybe do a retest to this level before pushing up like that. Just a few different scenarios. But I think even though I would have expected price to already drop from here, I think we could see it, get rejected from this price back down to this low before rallying higher. And the reason why I say that is because just like, these candles right here, if you look at the amount of volume and the amount of money it took to sell off and create these kinds of candles, not just on Bitcoin, but on the other cryptos as well. It was millions and millions of dollars it took to create these candles. And these candles were created, in the space of, about 3 hours. Price just flushed down. Like this is a 4-hour candle. Price just flushed in 4 hours. If we go down to the 2-hour, okay, so it's still a 2-hour candle. All right, so if you look at the 1 hour, you see finally a break. So in 2 hours, price flushed, all the way down from the highs, all the way down here, breaking through all these levels of support. That's not regular trading right there. That's not everybody jumping up and deciding, hey, let's just all sell our Bitcoin right now. No, these are institutions. I talked about, some people call it price manipulation, but, it's just the way things are. When you get big money moving in the market, they make the candles, and so, they do things. So I guess, yeah, it is manipulation in a way, but it's the way the game is played, I suppose, and we're just here to catch the ride. So similar to these very sharp, very fast declining candles, when you see in a 2-hour space of time, price does the opposite and just shoots right up parabolic. That's not because El Salvador decided to mine Bitcoin. That's a lot of money coming into the market because it's not only Bitcoin, it's across all major cryptocurrencies. So the big money has, they didn't flush the price this time. Instead, they caused the price to spike. And so with that being said, I think a lot of the retail investors and retail traders are just sitting on the sidelines and waiting to see what is up. You may have people still afraid who are bearish on the crypto or don't feel that it's time for price to go up as yet. So they may decide to sell some of their holdings. They may look at this as an opportunity. Maybe they bought in up here or right around in this range, and so price revisiting this level, they may want to play it safe and sell off some of their crypto, to secure, if not all, some of their investment. And that's, if you think about it, that's also a tactic for big investors too, because if you can't get enough of your crypto down here, you can spike the price, and those people who were, you would say, holding the bag, you would get a lot of those who would now want to sell, because price finally came up to their levels. Like, I'll be honest, like for me, I was holding an entry on Polkadot, and price crashed right up in here for me, and I didn't get out in time. And so for me, when I saw it break even, I closed that position because I did not think that this would continue. I think there's a strong chance for it to pull back, and I would rather buy in at a lower price. So I closed that position. So you're going to have a lot of people who got caught, with some of these spikes to the downside, and they're going to want to close positions, and that would give the big money more discount crypto to buy up without pushing the price too ridiculously high. So I think we're going to have some of that going on, which is why we'll see kind of a drop in price from this range. But we'll just have to wait and see. And if you just look through your favorite cryptos on the charts, I'll just do it real quick. We got Cardano, same thing. Not as strong of a move structure-wise as Bitcoin, while percentage-wise it may be similar. Bitcoin had a very strong push-up. If we look from the breakout point, we got 7%, and while Bitcoin was only 10%, the reason why I say it's strong is because if you look at the levels, so in the grand scheme of Cardano, this breakout is kind of insignificant, and it wouldn't cause a whole lot of hype. We even had a little breakout of this trend line here, and if I adjust the trend line just a little bit, it's just barely peeking through, so not super crazy. XLM, it's still technically in this consolidation zone, whereas with Bitcoin, it broke out of the consolidation zone that it's been in for the past few weeks. It's back up to this level in this hot zone, so to speak, right here. So this move was kind of more major for Bitcoin in terms of overall structure. So very strong move on Bitcoin side. But once Bitcoin is considered strong, everybody else is going to follow anyway. Some of the meme coins, like Shiba, for instance, while any move on Shiba is going to be a lot of percentage, again, okay, so we're still in the 10%, surprisingly. I had not looked at that yet, but we know Shiba, when prices spike, it can do some crazy moves, but it didn't really go crazy. Akita did almost absolutely nothing. Who else could we look at really quick? Dogecoin, nice little spike, but in terms of now this is actually a good look, if you were to pull a trend line, that's a nice floor on Doge, that's a nice floor right there. So yeah, we're just gonna have to watch and see what it does, but I do think there's a high chance that this could be the start of wave 3 to the upside. So keep an eye on it, do your diligence, and make wise investment choices. Be good, stay safe, peace out.